Hey, good afternoon, everyone. Thanks for joining me today and taking time out of your schedule. I hope you're having a good day. And we're going to spend about an hour or so, and I'm going to give you some good training and some tips and good information that you can use to go invest in rental properties right away. How to invest in rental properties to generate income and build wealth. And today I'm going to go through my 7-step multifamily system. So I'm going to give you some education today, and I'm hoping that you're going to learn. This is a great quote. It's one of my favorites. Education is the key to unlock the golden door of freedom. So, knowledge is power, but also knowledge with action is power. All right. So, I want you to stay until the end. We have a surprise bonus for you, and it's available at the end of the webinar. You'll have access to this bonus, and it's a very useful tool that you can use to start analyzing your deals. And don't worry about me selling you anything. There's nothing for sale at the end of this webinar. I'm here to give you information and give you as much value as possible. Okay, I want to go over the agenda. So today we're going to talk about a little bit about myself and my companies. I'm going to give you a little bit about my experience. I'm going to talk to you in detail about the 7-step system that I've developed for multifamily, and we're going to have a great Q&A at the end. Okay, so a little bit about myself. I'm an entrepreneur, and I've been involved in various businesses. So I graduated college with a BBA, a bachelor's in business administration with a degree in accounting. And so I started my career as an accountant. And later on, after 2 years, I decided that I would join the family business and immediately got into real estate. I'm a real estate broker. I've done home building, land development. I've done remodeling. I've done fix and flips. And as I told you earlier, I'm an accountant. And I'm also part of a third-generation real estate investment company. Currently, I am the CEO of the Creco Companies, a 60-year-old third-generation real estate company. And we operate several companies under this company, which basically invests in properties in different areas of the country. Now, I've been doing this myself for 35 years personally, and I continue to keep doing it. I also am a real estate consultant and coach through my company, the Multifamily Coach. Now, over the last 30 plus years, I've built 3,000 plus homes. I've renovated and sold over 200 homes. Currently own over 275 units in 4 states. I've developed several parcels of raw land into building lots. Owned several real estate brokerages, and I property manage my local properties in New York. Now, a little social proof. I've been featured, me and my companies have been featured on several different publications. American Builder, which is a local builder magazine in the New York tri-state area, and also Builder Architect. So these 2 magazines are pretty large publications in my area. I've also been featured in Real Estate magazine as top 5 brokers in New York, and also in Custom Home magazine, having done several high-end custom homes over the last several years. So what are the benefits of investing in multifamily? Why multifamily versus single family? Well, you can max out your cash flow with multifamily. It's superior. You can spread your risk. So if one tenant moves out, not a problem. You still have paying tenants. Now, if you have a single family home and one tenant moves out, now you have no paying tenants. You have economies of scale. So the larger the property, the expenses are less in proportionate to your income. So the bigger, the better. You have tax benefits, which I'm not going to get into right now, but you have tax benefits, one of them being depreciation. And passive income. So with passive income, you basically uh, collect money without doing any work for it. So basically, when I mean without work, passive income is, money's being sent to you whether you're sleeping or not. Actually, you're collecting money when you're sleeping, which is a great thing. Now, I want to share a couple of experiences how multifamily investing has benefited me specifically through passive income. So it's allowed me a lifestyle, um, freedom of time, family, and winter in Florida. So it's allowed me to create this lifestyle of my own liking and freedom of time. So in the winter times, as you can see, me, my wife, and my 3-year-old, we have been spending the winters in Florida over the last several years. I'm able to bring my son to daycare and drop him off at 8:30 instead of 7, and have to run to get to work. So I have the freedom of time. I can bring him to an arcade here, as you can see, and a play museum or a Dunkin' Donuts for some coffee. So the multifamily investing has allowed me to do this. And you can do this also. Okay, so you may be saying, well, why am I here? Well, you're here because you want to learn how to invest in multifamily properties. You're here because you want to make money. And you're also here because you want to have freedom. You want to be able to choose your own lifestyle. And you're also here so that you can take this knowledge and put it to use. And I'm going to go through what you can do with it after you have, listened to this presentation. And I also want to remind you to don't forget to get your workbook and take some good notes as we go along. Okay, so my promise to you is that I will cover the 7 steps in detail, the 7 steps to multifamily success. I will give you an implementation plan, and I'll give you some action steps that you can take at the end of this webinar and put into practice right away. All right, you are in the right place because right now you may be saying, well, is this really for me? Yes, this is for you. Real estate investing has changed my life. Okay, and it can change your life too. Okay, so let's clear it up from the beginning here. Who's this training for? Now, this may be for you if you have a job and you want to add some income. This training is for you if you have a job and you want to phase out of a job and do multifamily investing full time. And this is for you if you're already investing, but you want to go to the next level. Maybe you're investing in single family properties, but you want to start going up to 6 units and 10 units and 20 units. This is for you. Okay, who this training is not for? This training is not for you if you want to get rich quick. So if you're here and you want to get rich quick, I don't want to waste your time, so this is not for you. If you don't have any time to invest, this training is not for you. And if you don't want to do any work, this training also is not for you. So just check the list and make sure that you're not looking for any of these. Okay. So why multifamily and why not single family or retail or office? Well, the apartment market's recovery has been robust over the last several years because rents and occupancy are growing stronger in each of the past 5 years. So the rents are increasing 2 to 4% a year, and the occupancies are growing. So the vacancy rates have continuously gone down. Right now, the vacancies are at around 4%. You have weaknesses in other commercial real estate sectors like retail, shopping centers, and office. So that has pushed investors to the apartment market. So you have a flood of investors from foreign capital. And American office owners and single family builders are now getting into the apartment market. So builders who were building office buildings and single family home projects, they are now, for the first time, building multifamily apartment buildings. So more money is being pumped into multifamily. Money is following multifamily. So in 2015, 465 billion total invested in U.S. commercial real estate, and multifamily made up $137 million of that, 30% of the market. So that's a big, big number. So that's why multifamily. See, I follow the leaders and I follow the big guys. Okay, so do you want more money and more freedom of time? Of course you do. The choice is yours. So my 7-step multifamily system. With this system, it has allowed me to streamline and scale my business. It has allowed me to leverage through people and money, and it has allowed me to grow. And I'm going to go cover the 7 steps, and you can do the same thing also. Okay, so let's jump right in. Get a pen out, take some good notes, because you're going to put this action plan into place as soon as you're off this call, starting this afternoon. Planning and goal setting. So, when I talk to my coaching clients and we have our initial call, they want to start investing in real estate right away. What properties do I look for? Show me how to analyze it. And I tell them, hold on. We have to start with setting goals. You got to know where you're going, because if you don't know where you're going, how are you going to get there? So setting goals, and I like to use the SMART goal system. Now, we want our goals to be specific, measurable, attainable, realistic, and time specific. So you want to really map out a plan so you can get to your destination. Identify your sources of resources. So identify teams, finances. So identify brokers, contractors, family, friends. Who can you tap into for money? Just brainstorm. Tap into potential investors. Now, you may want to start small and maybe you have some capital. But if you want to start at 20, 30, 40 units, you're going to need some money. So you want to tap into potential investors. You want to map out your criteria. What type of properties do you want to buy? How much you want to spend on the properties? Where do you want to buy them? And that ties into the next item, type of deals. You know, what price range do you want to be in? How old are the properties that you buy do you want them to be? Whatever your criteria and buying strategy is going to be that fits your personal needs. Are you going to buy for your personal portfolio, or do you want to create a business out of this? You want to create a scalable business with multifamily properties with a team? Or maybe you want to do a little bit of both. Now, we are real estate entrepreneurs, not real estate investors. And what I mean by that is, of course, we're real estate investors. We invest in real estate. But an entrepreneur is someone who creates and solves problems. That's what an entrepreneur is. So that's what you are. Think of yourself as an entrepreneur in real estate. And part of your plan is how to go bigger. Now, bigger may be if you're buying single family homes, you go to a 6 unit. That's bigger. So whatever your bigger is. Planning and goal setting. This is the key foundational step for multifamily success. The second step in my system is choosing your markets. Now, where do you want to buy properties? So you need to choose an area based on your criteria that we talked about in planning. Now, once you develop this these markets, and we suggest 3 markets. Now, once you pick these 3 markets, you want to make sure that these things are available in your markets. Deal flow. Are there enough properties to look at in this market that fit your buying criteria? Now, you don't want to go look at a market that has, 4,000 people in it with 1 apartment building. That's not enough. Why this market? Is it a place that you like to visit? Does your family live there? Do you want to retire there? Is it a warm climate? Maybe you just want to look for a market that you can drive to no more than 10 hours. Maybe you want to have a plane flight that's no more than 3 hours. Okay, so these are just some examples, but why are you choosing this market? You want to look for job growth in the market and expansion. So what I mean by expansion is, so when you go into a market, do you see roads being expanded and bridges being built and properties going up and cranes and construction equipment? That's expansion. You want to look at the population in the market. Okay, you don't want a market, like I said, where you have 4,000 people. Okay, we like a market size of at least 250,000 people. You decide for yourself. What price points do you want? And you want to look at a market that does it have appreciation or cash flow? So if you look at the Northeast, specifically New York, you're looking at appreciation. If you're looking at a market in the Midwest, you'll have appreciation, but not at the rate that you will in a market like New York, but you will have cash flow in a Midwest market. Okay, so you want to look at these factors and ingredients to make sure that they're in the market that you're looking at. Okay, so now that we've chosen our markets, now we have to go into our markets and we have to go find deals. Now, how are we going to go find deals? Okay, we've selected the markets, we've established our criteria. As you're finding deals, so let me just start with broker relations. So the best and most profitable way to find deals is to build broker relations. And one way to do that is you go on LoopNet, which is the #1 commercial real estate site, and you search for multifamily properties in your market. And once you find properties that are in your market, whether they meet your criteria or not, you're going to send an email to the broker or you're going to call him and you're going to tell him that you're an investor from wherever you're from and that you're looking for multifamily properties, but you found him on LoopNet and this property that he has doesn't fit the criteria, but does he have anything else? And you're going to put him on your contact list. You're going to build your contacts and your pipeline, okay? And so as you're building these broker relations, you're going to keep in touch with them, whether you do an email campaign every month or whatever it is. And they're going to keep, as you keep talking to them and building the relationships, they're going to start sending you deals. Okay, so you want to build your contacts and your pipeline. You want to build a network. Maybe you go to networking meetings, BNI, meetup groups. You want to reach out to other owners, other investors. Google searches, looking for properties and building relationships with people that you can meet online who have properties for sale or brokers. You can do auctions, Craigslist, property managers, direct mail, banks. Okay, these are all different ways to find deal flow. Okay, but your broker relations, from our experience, is the most profitable. They're going to give you the off-market deals, typically, and the best deals. Okay, so you want to make sure you put them in your contacts and your pipeline. And as you get deals from brokers, you want to track your deal flow. Okay, now we use a pretty intricate Excel spreadsheet to track all this, and you want to track deals because a lot of times deals go into contract, but they don't close. And so a month or 2 or 3 later, after they tell you the deal is in contract, you just want to check and follow up to make sure that it still did close. And if not, that could be another deal back on the table for you. Okay? So very important to develop the broker relations. Okay. So now we analyzed our deals. And now it's time to start building our team. Now we're always doing these items, these different tasks simultaneously, but this is kind of a systematic order. So now it's time to build our team. And with our team, we have the foundation team, okay, which is our base team. This is the team that's helping us on a daily basis. We have coaches, mentors, accountants, attorneys. This team is continuously, helping us on a daily basis. Then we have a tactical team. This is a team that's helping us when the deal is in process, when we're putting an offer in on the property, when we're doing due diligence, when we're ready to go to contract. You're going to have your accountant, your attorney, your CPA, brokers, the property managers, contractors. These people are going to help you get bids if there's renovations to be done to the property. Your support team, this is your staff, okay? This is the team that's going to support you after you've closed on the property and it's operating. And specifically, this is your property manager and your leasing agents and your contractors if you're renovating the property, okay? So building a team is key and important because without a team, you can't leverage and you can't grow, okay? So, 75% of our properties are out of state and I don't manage them or have any hands-on them, hands-on work with them. So I rely on my support team. Okay. So we have the deals. We found deals. We're building broker relations. We have our team in place. We can, tap into our team. Now we want to start analyzing the deal. Okay. Now this is where it's very, very important to have the right tools, the right knowledge, because this is where it can cost you thousands and hundreds of thousands of dollars. You don't want to mess up here. Okay. So the way this works is you're going to locate a property. You're going to reach out to the broker. He's going to send you an offering memorandum. He's going to send you a rent roll and current operating statements. And you're going to review those items. Okay, you're going to go through the offering memorandum, which is pretty much a big brochure on the property. You're going to look at the numbers. Now you're going to look at it and you're going to identify the opportunity. What can I do here? Does this property need work? If it needs work, how much money do I have to put into it? How quick can I increase the value? That's called forced appreciation. Can I increase the rents? Can I decrease the expenses? Is the seller motivated? Why is the seller selling? Does he have to sell? I always like to call the broker and say, thanks for sending me the information, but I want to just spend 5 minutes. Can you give me a story on the property? Give me a little history. Tell me about it. And you got to ask the right questions. Okay. You got to ask the broker, why is the property for sale? How long is it for sale? Okay. And of course, I possibly can't cover everything on this short 1 hour training, but I'm going to give you as much as possible. Okay, now you need to understand revenues. What is the income made up of? So typically with multifamily, it's made up of your rent roll. These are people who rent your apartments and they pay you rent every month. That's your gross income. And in addition to your rents, you can have other income, application fees, moving fees, legal fees, pet fees. If they bounce checks, maybe they rent on a month to month, and you can charge a fee for that. You can make money with laundry machines, vending machines, storage space, pet fees, on and on and on. So you can get creative, and this is where the entrepreneur mindset comes in. Okay, so understanding the rent roll and doing a rent survey is also important in this phase because you want to make sure that you know what the market rents are, okay, when you're analyzing the property. Because if the broker says, well, the market rents are 500, but they're only charging 450, we're not going to take his word for it. We got to confirm that, okay? And so you really want to have an understanding of your revenues. So you have your rent roll, your vacancies, which your rent roll less your vacancy, which gives you the effective rental income. And then you have your other income, and then you come up with your gross income. Okay. Now, at the bottom of the revenue, we have our expenses. And with expenses, I'm just going to kind of keep it into 3 categories. We have our fixed expenses, our variable expenses, and our mortgages. Now, a reserve is typically not an expense, but it's money put aside in case something major breaks like a furnace or a roof. Okay, but you have your fixed, your variable, and your mortgage, which is your debt service. Okay, and so typically what you're going to do is you're going to take your income, you're going to subtract your expenses, you're going to research the cap rates in your market that you're looking at for this particular property, and you're going to come up with a value of the property. Now, the broker may have the property listed, determined by market, where they don't list the price of the property. Well, they may list the price of the property, okay? But we want to do our own research and dig in deeper on our own, okay? One other thing that's important is on the expense side is taxes. Now, taxes typically will always get reassessed after the closing. So another area that you can lose money is the broker may say, well, the taxes are $80,000, but after you close, they may be $120,000. So this is you can lose a lot of money here. So you want to call the tax assessor and you want to just ask them, hey, if I bought this property at 123 Main Street and I paid this amount of money, what would I be paying in taxes? And then what's your exit strategy when you're analyzing the deal? Am I going to keep this property for 3 years, 5 years, 10 years, 20 years, whatever it is? Okay, so you want to know what your exit strategy is. Okay. So now I want to show you I want to show you the analyzer that we use to analyze properties, and I want to give you some examples of the information that the broker sends you. Okay. So if we take a look at this here, we're going to see this is an offering memorandum on a property from a broker. So they're typically going to have the name of the property, the address, when it was built, what city it's in, contact information, and a picture, of course. And then, they're going to just give you a little summary of the whole property, detailing important information. They'll give you an area map. They'll give you a little description of the area. They will give you an overview, kind of like an aerial. Okay. Then they'll give you what's around the properties, different retail and restaurants and whatever else is available. Some pictures of the property and the amenities. Comparable rentals. So they're going to say to you, hey, this property, located here is getting this amount of money. It's this occupancy is what it has, and you're going to compare it to the property you're looking at. Okay, and they'll give you as many as available. And then they'll also give you a map. And this is a tip. If you're dealing with a larger real estate broker firm, you're typically going to see this type of offering memorandum. Now, they give you a graph, which is nice. It's just a different way of looking at it. And they're also going to tell you, hey, this is what other properties in the area sold for and what the cap rates are. So it gives you a good idea of the area. And again, they're going to give you a map of the sales and a graph. And then they're going to give you a financial analysis, and they're going to give you a pro forma. Now, this is not what the property is doing right now. This is what the broker is saying, hey, this is what we think it could do. But we don't really put any weight on this. We do our own pro forma. And of course, they have their disclaimers and whatnot. So this is your typical offering memorandum. Okay. Now they're going to give you P&Ls and financials. Okay. So they're going to give you what's called a trailing 12. That's typically what you're going to use to analyze a deal. You can look at a trailing 12, a trailing 3, a trailing 6, or a trailing 1. And pretty much what that means is trailing 12 is, it's a 12-month period. Okay, this happens to be from January 2015 to December 2015. Now, it doesn't have to be a calendar year. Okay, and then they'll give you a trailing 12 from March 2015 to February 2016. And typically, we like to see some previous financials to current. Okay, and then your rent roll. So here we have 3 types of rent roll. They're all the same, but one is current as of March 2016. Actually, this is the most current, February. And then we have one in December. So basically, we want to see a little history of what it looks like. And this is a 10-page report showing each apartment, tenant name, if it's occupied, when they moved in, when their lease ends, and how much they're paying, and if they paid for this month and what's due. Okay, and we can analyze each line item, but we want to look at the bottom line, and we want to look at, you know, uh, what are we collecting this month? Okay, and so here's what they're collecting 47, but they could potentially make 58. Okay, so there's a lot of numbers here to be analyzed, but this is what you're going to see typically from your broker. Okay. The other thing that that ties into this is I talked about market surveys and checking out the market. So this particular market, Spartanburg, South Carolina, this is a typical market analysis. So you want to look at the affordability, a little information on the location, the economic development that's taking place, the infrastructure, what is it made up of, what's the crime, okay? And then we take the specific property that we're looking at, and we kind of do a deep analysis of the prices, the neighborhood characteristic, the income in the area, um, and so just all specifics to this particular property. Okay, um, and our analyzer, looks like this. So we have a memo tab. We basically just put in, this is all from the broker offering memorandum, the name of the property, where it's located, the broker's name, the listing price, what we think we want to pay for it, okay? Then we plug in the amount of units, how many units of each type, what they're getting for the rents, okay? And then we want to put in, our loan to value, 75% loan. We're going to put 25% equity, and we plug in whatever our closing costs are going to be, and what the cap rate is at the time of sale, and reserves, and if there are any renovations for the property. So if the property needs work, you're going to unit upgrades and miscellaneous. So you want to put it in here. But here's the bulk of the analysis, and this is where you really want to focus your attention. Okay, so basically, if you look at the left side, these are the actuals, and these numbers are pulled right from the financials that the broker sends us, that's given to them by the seller. So we just basically duplicate it and put it on our spreadsheet, and it gives us some information here. Then we look at, what do we think we can do with the property, okay? And we look at it over a 5-year period, okay? We look at it over a 5-year period, and we say, okay, in year one of taking over the property, we think we can increase the rent from $721,000 to $800,000. That's based on our research and market surveys and different analysis, okay? And this is our income, 658, and then we say, okay, we think our expenses are going to be this much, and we come up with a number, and based on that number that we come up with, we look at the numbers, we analyze it, and this spreadsheet tells us a lot. Okay, so we typically, our criteria, we don't want our internal rate of return to be less than 12%, excuse me. So we want to look at that. We want to look at our total return. So our total return, is 62%. Our annualized return is 12.6. So these are good numbers for our criteria. Upon sale of the property, we could potentially make $400,000. Okay. So, and, of course, in our coaching, we go deeper into this spreadsheet, and we go through the cap rates, and, we talk about, what the right number is to offer on a property and where the opportunity lies. Okay. But I just wanted to give you kind of a quick overview of what the analysis looks like. Now, this is a 5-year analysis because our exit strategy is typically 2 to 7 years. This is a 10-year analysis. Right now, our strategy is not to hold properties 10 years, so we focus on this one. Okay, so I hope that was helpful for you guys to see. Okay, let's jump back in here. All right. Okay, so now that we've analyzed the deal and we like the deal and the numbers work and it matches our criteria, okay, now it's time to put an offer in on the property. How do we do that? Okay, so the way we do it is we submit what's called an LOI with a cover letter and a bio of you and your team. Okay, are you putting in a cash offer? Meaning you're not going to get a mortgage. You're either going to put your own money or you're going to have investors put money in. Are you going to put an offer in contingent upon financing? Maybe you're working with a seller and he's going to finance the property for you. You know, and once the LOI goes in, if it gets accepted, now you go to contract. And well, actually, before you go to contract, the LOI goes in. You may negotiate the price. Okay, then you go to contract. After you go to contract, you start due diligence, which means that you go down to the property and you start checking things out. You get a contractor, you get a plumber, an electrician, and you take a look and see if anything is needing to be done that wasn't disclosed to you. And if that's the case, you may want to retrade, which means that you come back to the broker and you say, listen, you didn't tell me that the furnaces were in bad shape. We've discovered that we need $50,000 to fix the furnaces, so we want a credit. Okay, that's retrading. And you restructure the contract. Okay, and I want to just show you a sample LOI that we use. Okay, so here's your typical LOI letter of intent. Okay, so pretty much it's got the date, the name of the broker, the company name, the address, the name of the property where it's located, and it's template that we use. So the seller of record is what you want to use. The purchaser is your company and or any other entity affiliated with the purchase. So what this does is that, we have this is our real estate sponsorship company. And then what this does is that we can assign it to any other company that we create after we buy this property. You want to reference the property, that it has 100 rentable units. This is what you're willing to pay for the property. This is when you will close on the property 45 days after the following items take place. So, and these are what are called contingencies. So contingency is that, so number 9. So we're saying that, hey, if we can't get a mortgage of $2,025,000 in 45 days, then we have the right to get out of this contract. Okay, that's all that says. And there's several contingencies we put in here. We tell them how much deposit we're going to give them. And the buyer and the seller both have commitments that they have to keep with this letter of intent. Okay, and it's very specific. And then at the end, we put an exhibit, and we're requesting the seller to provide us all this information. The operating financial statements for the last 4 years, prior 2 years tax return, rent roll, so on and so forth. Okay, so again, I just wanted to show you so you have a visual and it's more clear. Okay, LOI. Okay, so now we have an offer in on the property, we've renegotiated, we're retraded, and we're in contract and we're ready to close. Now we need money. Okay, so raising private money. Okay, so with multifamily investing, if you want to go bigger and buy bigger deals, you need to raise private money from private investors, raising private equity. And this is pretty much a continual cultivation process of building a pipeline of potential investors to tap into. Okay, and of course, this is all ties into your criteria and your strategy. You may only want to buy properties from your own portfolio, and you may already have money. Okay, so you can put 20% down and get a mortgage of 80%. Okay, so but I'm giving you the whole picture. So how to go bigger, raise private money. How do you do that? Why do we use private money? Okay, well, how do you raise private capital? Just talking to people. Okay, just talk to people. You grow your warm list contacts first. Be consistent and cultivate. Okay, so I love to go through my cell phone, and I love to look at my phone book. Okay, and just jot down names and what I think they may be worth or how much money I think they have, and I'll just maybe put them on my email list. Real estate investor groups, associations, business network, local chamber of commerce, alumni groups, entrepreneur groups, social media, Facebook, Twitter, LinkedIn, accountants, attorneys, doctors, high income earners, business owners, people who make money and they may want to have some tax benefits to offset that, such as depreciation. Maybe you create some brochures, newsletters, articles, do some mailings, family, friends. Okay, so again, being creative, being an entrepreneur, tapping into resources, okay, steps in the private money process. So it's continual. Okay, you want to educate your potential investors. Okay, we have sample investment packages that we send out. We say, hey, this is a sample. This is a pretty much a typical deal, but the numbers will change. But this is the concept. Be consistent. Have an event. Have a local, wine and cheese at your local hotel. Rent a room. Do a webinar and present an opportunity with a sample property. And there's two types of private capital. Okay, you can have debt and equity. So a debt investor is pretty much they're lending you money and you pay them interest every month, and they'll have a note and a mortgage on the property, so their investment is secured by real estate. Equity percent ownership as a private investor, they're going to invest money in a partnership, and they're not going to get interest, but they're going to get a return based on the numbers of the property. Okay, and they're also going to be a percent owner of the company, so they're a partner in the LLC that you set up. Okay, so raising private capital is an important part of the multifamily investing business. Okay, so let's recap the 7-step multifamily system. Planning and goal setting. Okay, have your SMART goals laid out. Choose your markets. Where do you want to buy? Why do you want to buy there? What price range? Strategically go through it and brainstorm. Finding deals, broker relations. Tap into brokers and build relationships with them in the market that you want to be in. Build your team. Okay, building your team. Your brokers, your property managers, your contractors, your attorneys, your CPAs, coaches, mentors. Analyze the deal. The deal analyzer, okay, know your numbers, know your revenue, know your expenses, know the cap rate, know the market. You want to submit offers through an LOI with contingencies. You want to negotiate, retrade, and then close on the property. And raising private money. Okay, this allows you to go bigger, to leverage. So you want to continuously cultivate and be consistent with building your pipeline for potential investors. Take action now. So I'm going to give you action steps. Create your deal criteria. Okay, write this down. Set up email campaigns to brokers and to potential investors. Create your deal flow. Okay, tapping into your brokers and any other sources. Analyze the deals that you're getting. Make offers on the deals. And track the deal flow. Okay, because you may not get your offer accepted, so you want to track it. Okay, now I want you to write this down. I want you to take massive, imperfect action creates massive results. Okay, knowledge does not create results. Action creates results. Okay, so I want to give you live, real life proof. Okay, this is just, I pulled out a quick case study when I was buying smaller units, 8 years ago. So this is Lexington Apartments in Mount Kisco, New York. Okay, now this property, we purchased it in 2008. This was a foreclosure. Okay, it's a 4 apartments above 2 retail spaces on the bottom, and behind here is a 3-bedroom, 2-car garage home on this piece of property here with a parking lot in the front. Okay, so the owner had not paid his mortgage in, I think it was a couple of years. Okay, so we reached out to the bank, to the owner, and made a deal. Okay, so we didn't buy the property. We bought the company. We purchased the stock of the company, and you can do that. It's legal. Now, when we bought the stock of the company, when you buy a company, you buy the assets and the liabilities. Okay, so we bought the loan. Well, we didn't buy the loan, but the loan came with the company. Okay, because this loan was in their company. They owned it in the company. So we took on a $550,000 loan. We paid the bank $150,000 to bring the loan current. We made set $25,000 in repairs to the property. Okay, so our total invested was $725,000. Okay, now at the time of the investment, the property was already worth about $900,000. So we had immediate equity from the get-go. Okay, now right now this property is producing us, $12,500 a month. Okay, per month. Okay, and our expenses on this property are about maybe $3,000 a month. Okay, and so we're netting a nice income on this property. Okay, and right now the property has got a fair market value of $1,200,000. Okay, so we created to date $475,000 of equity, meaning that our total investment is $725,000, which is the loan that we took over, the past due payments that we took current, and the repairs we made. And right now it's worth $1.2 million. Okay, so the difference between these two numbers is $475,000. Okay, this is what multifamily can do for you. I don't go to this property. It's 3 miles from my office, but on a smaller property, I typically have one of the tenants manage it for me. I give him a little decreased rent and he manages the property. And I basically get the rent brought to me every month. And that's passive income. It allowed me, this is an example of what this multifamily investing business has allowed me to do to create my lifestyle and the life that I want for me and my family. So a lot of this is about mindset. Now, in order to succeed, we must first believe that we can. So believe you can, because you can. If I can, then you can. All right, so implementation. Have a plan and a goal. Create your roadmap. You need to know where you're going. Go research several markets. Create deal flow in those markets. Analyze the deals in the markets that you're getting. Submit offers. Track the deal flow. Set realistic expectations, because success is not achieved overnight. Keep your eye on the goal. Get into mentorship programs, coach, whatever. Everyone needs a coach. Okay, I don't believe that anybody can do anything on their own. We all need help. Now focus. Follow one course until successful.